This time, I would like to talk about Chinese solar power manufacturers. What is currently a global topic is China's export of deflation. Due to China's large population, everyone needs to have a job to avoid mass unemployment, and many people are still employed in manufacturing. As a result, China's production capacity is vast, not necessarily in terms of quality but certainly in terms of quantity. However, the majority of Chinese people are still not wealthy, so they can't consume all the products manufactured domestically. Therefore, China needs to sell its excess products abroad to keep its economy running. This overproduction and the need to sell excess products abroad is almost a fate for Chinese manufacturers. From the perspective of countries where Chinese products are flooding in, the influx of cheap Chinese goods causes problems, leading to complaints about China exporting deflation. However, if China were to stop exporting, its companies would have no market to sell to, so they won't stop. For example, the US imposes tariffs to prevent the export of deflation from China. While this means that American consumers can't buy cheap Chinese products, if US industries decline due to deflation exports, it will cause even bigger problems. Thus, it's clear that some form of protection against deflation exports is necessary. The solar panel industry is no exception. In the past, Japan also produced solar panels, but now Chinese manufacturers dominate the market because their products are cheap. Due to the influx of cheap Chinese products, Japanese manufacturers couldn't compete on price, leading to widespread use of Chinese solar panels in Japan. However, in the solar panel industry as well, the fate of Chinese manufacturers I mentioned earlier applies. There are many solar panel manufacturers in China, but they can't consume all the panels domestically. Thus, they export them, but due to fierce competition in China, it leads to a price-cutting war. In China, when competition between manufacturers intensifies, instead of making higher quality products to appeal to consumers, they focus on lowering prices. This leads to manufacturers selling a lot but not making much profit, cutting corners on materials to lower costs, resulting in declining quality and a general deterioration of the industry. This is the pattern in China, and I think solar panels are already as cheap as they can get due to cost cutting. Since there is already a price war in China, when they export these products, manufacturers in the importing countries can't compete on price. In Japan, for example, where there were once solar panel manufacturers, Chinese companies have taken over the market share. Japanese consumers might think that Chinese companies are profiting from the influx of solar panels, but in reality, they are engaged in a brutal price war, with many solar power-related companies in China having been in a precarious situation for some time. For example, an article from Reuters in June mentions a price freefall, indicating that manufacturers are engaged in a price war to the extent that they can't sustain their businesses. Manufacturers have appealed to the government for help, but each major company is backed by local Communist Party governments, making it practically impossible to coordinate production adjustments or profit distribution. Even though China is a communist country with a planned economy, each party is too focused on maximizing their own profits, leading to chaos. In June, manufacturers pleaded with the government, but by then, it was too late. Another article mentions a Chinese solar panel manufacturer called Solar, which recently went bankrupt. This company was a fairly large firm with significant transactions with multiple large Japanese companies. However, it had been said for some time that this company was in trouble. It was a family-run business, and in 2011, the founding family owned 43.6% of the company's shares. From around 2017, the founding family started selling off their shares, and over about 5 years, they sold more than 600 million shares, securing over 20 billion yuan in cash, over 400 billion yen in Japanese currency. This suggests that the founding family knew the company wouldn't last long. As a result, the company's stock price continued to fall, and it eventually got delisted. At that time, the company had 280,000 shareholders who were left unable to sell their shares due to the delisting, and the company eventually went bankrupt, rendering their investments worthless. This situation highlights the risks of investing in Chinese companies, where the real goal for many is to raise capital rather than continue operations or invest in the future. To summarize, fierce competition within the Chinese solar panel industry has led to companies like Solar going bankrupt, and many other companies are in a similar situation. These companies, unable to make much profit domestically, are looking to sell their products abroad. The ideal markets are wealthy countries with policies that promote solar power, close to China to minimize transportation costs, and with weak domestic industry protection. Finally, regarding the issue of forced labor in China, The U.S. introduced the Uyghur Forced Labor Prevention Act in 2022 to block imports of solar panels from companies involved in forced labor. If countries continue to import products from nations that use forced labor because they are cheap, they risk losing market share across various industries to China. The recent significant appreciation of the yen by about 10 yen has also drawn attention to exchange rates. In the context of a weaker yen, which makes Japanese labor cheaper globally, the presence of countries using forced labor, where labor costs are essentially zero, means Japan cannot compete. Thus, it's crucial not to buy products from such countries, or if necessary, impose tariffs to counteract the cost advantages achieved through forced labor. Without such measures, Japanese industries will struggle. Furthermore, individual imports from China through the internet have become prevalent, allowing people to buy incredibly cheap products directly. For instance, Temu, a company whose advertisements are everywhere online, offers apparel for just a few hundred yen. If Japanese consumers, especially the youth, start buying such products en masse, it could severely impact the domestic apparel industry. In conclusion, regulations that protect Japanese industries and consumers from the influx of cheap foreign goods, particularly from China, are becoming increasingly necessary in this era of easy online shopping. That's all for today's discussion. I look forward to seeing you in the next video.